Investors and traders, welcome to the channel Market Chart Pattern. Today is 22nd of February 2025, and we'll be taking a look at the key US markets in this video. As always, this video is for educational purposes only, and it is not a financial advice. What we are looking at is the weekly chart for the Dow Jones Industrial Cash Index. So this is a CFD version of it, but it's pretty accurate for our purposes, especially because we are going to take a look at the timing. We have got a key timing coming in towards the end of March of 2025. Now, since it is a weekly chart, so we have to give it 2 weeks on either side. So pretty much from the middle of March 2025, we are expecting a key turn date to come into the marketplace, and then we'll see how the price action will actually perform. One of the sayings from WD Gann is that when price meets time, the pattern is complete. So we'll have to wait and see how the price will actually react when we get to our timing. So it's going to be an interesting observation for us. Okay, now let's take a look at the US dollar. So here we go. This is the weekly chart of US dollar. The US dollar last week was pretty strong. Much of the strength actually came in last couple of last trading days, so especially on Friday. I think we had some jitters coming from the news with regards to the trade tariffs being put on Mexico and Canada. Who knows what are the reasons, but we just look at the technicals. So for us, we had this window drawn a long time in advance. We were actually looking for the market to get into this one once it broke above this 107 level, and we have seen one negative candle. It's one of the bigger bearish candles in this entire move high, which we had also caught because of our pattern recognition into this window right here. You can actually watch the older archived videos, and what we are really watching for is 107 and 106 levels. If the dollar is actually able to break below those levels, then I think we could see the dollar move much lower. But till then, it's gonna be more of a trading range affair, and this is what we are looking at. So you can see that 106.12 is basically 38.2% retracement. If the market is able to on weekly basis, and I would really like to see two consecutive closes below this level, especially also this little structural support being taken out with the downside, then I think in my view the dollar might have actually put in some sort of a top. But right now dollar is pretty strong and quite stable, so we'll just keep on watching for our patterns right here. And this is the daily chart. Here we go. On the daily chart, what we can see is we have this pattern drawn, and the market actually put in a top right at this 1.618 expansion, very close to the ABCD completion as well. So we had a confluence of two patterns coming very close to each other, and then we have seen a pretty nice pullback right into this 61.8% retracement around the 107 level. Now the market has actually moved beyond the 38.2% retracement of this entire swing low, which is actually constructive for the bulls for the US dollar. But it's also right sitting at the 20-day moving average as well, which could actually provide resistance. So we'll wait and see. I think it's going to be more of a trading range affair with the bias with slightly to the upside. However, we do have some these patterns that we saw on the weekly chart, suggesting that we could see perhaps a pullback in the US dollar. So we'll just be watching. Right now the US dollar over the course of last week actually put in good performance. It is strong and stable, but we are watching our key levels of 107, 106. A break below these, in my opinion, will actually tell us that weakness has come into the US dollar. Now on the flip side, if we look at some of these currencies, so let's take a look at the Euro USD, which is about 51%, 51 to 52% of the dollar index, and it's pretty much a mirror image of the US dollar, but not exactly 100%. So what we have seen is a nice rally coming right at the bottom, where we were looking for these patterns to have completed this yellow one, and then we also had these smaller red ones actually putting in a nice pattern formation right here. at 1.02 level, which is we have got a number of these patterns completing right here. So there we go. We have the 61.8% retracement of these lows going all the way back to November of 2022, maybe a little bit into October 2022. In fact, we had the 1.618 expansion of this swing, which is shown in black. We had this orange one being completed. So a number of things coming together. So it was going to be a pretty strong support level, and we have seen a nice rally. The rally went right into the 78.6% retracement, and now what we're looking at is a pullback here. And let me actually draw a retracement to see where we are. It looks to be pretty much around the 38.2 to 50%. Yeah, it's 50% actually, if you're right at the 50% level, and also right at the 20 period moving average as well. Now, one of the interesting things is that if you look at the entire leg lower, what we have seen is basically the biggest rally in this leg has been by this much, and this was sold off. So if we just take this and try to use our market symmetry concept, then actually this one went a little bit above that, so actually signifying a change in structure in my opinion, because this is the biggest rally we have seen, or the biggest rally was this much in this entire move lower, and this one has been actually a bigger rally. So on a break above, and I would really like to see two consecutive closing above the 105.35 level, above the 78.6% retracement, and I think we can have another leg higher. We could see A, B, C, D, and it could actually go as high as 1077, which is going to be the 78.6% retracement of this move, this swing high to this swing low. And all of this could just be a corrective move in this entire bearish leg lower. That possibility is there, but getting above this 78.6% retracement would tell me that we might have seen a good low come in on the 13th of Jan 2025. So this is what we are looking at in the Euro USD. And on the weekly chart, here we go. On the weekly chart, you can see we had a number of these ratios and patterns coming together right here, and thus far we have seen a couple of weeks with stronger moves. This 13th of January and then the following 20th of January week, these have been positive in a pretty strong bearish move to the downside. Now let's take a look at the British pound. Here we go. So this is the weekly chart of the British pound. In the British pound, we had been watching this 122.60 level because that was the 38.2% retracement, but the market actually went a little bit lower and then it bounced back. And if we just take a look at this on the daily chart, here we go. On the daily chart, we had this key ratios coming together around 122 and a little bit lower around 128.7 as well. The market pretty much went to lower to this 1.287, which is the 1.618 price projection, and we have seen a pretty nice rally ever since. Now this market is not as strong as the Euro USD because the Euro USD was able to get to the 78.6% retracement of this leg lower. Actually, let me double check this one for you. So of this one, so I think the British pound has done the same. So they are kind of similar in that respect then. So here we go. Let me actually bring this down. Yep, definitely it's done the 78.6% retracement as well, and now it's just pulling back right now. So we'll just wait and see. The pullback could be a little bit deeper as well, so we'll have to watch for what sort of ratio we get to in this pullback. And we are, yeah, the 38.2% retracement comes a little bit lower around the 123.60 level, so we could actually pull back a little bit further in this one. And again, the momentum wise, the price is above the 20-day moving average, which is good, but the 89 period moving average is above that. So I think on the daily chart, the momentum is going to take, and we are looking at sort of longer term momentum as well, quite some time to resolve fully for the bulls. But if we are able to get above this swing high right here on 2 consecutive daily basis, and especially this 125.40 level, which is 61.8% retracement, we could see a nice ABCD move to the upside as well, maybe testing 128, which is going to be this swing. So we'll have to wait and see. The US dollar remains pretty strong, and there is a possibility as well that if this 38.2% retracement does not hold, we are looking for a deeper pullback, maybe test of this region around 122. That is not out of sight yet. Okay, so this is what we're looking at in the GBP USD. Now all these moves that we're looking at, they are it's quite difficult to perhaps even understand these, because they are counter trend, in the sense that we are kind of picking the bottom right here, because this is what the patterns were telling us. But on the flip side, this is where we had a number of these patterns coming together, and we were looking for the market to put in a pretty good top as well, and it did. So I can understand that it's with the dollar being that strong, it could be emotionally a little bit difficult to actually see whether this kind of support might hold or not. But we have to follow the patterns, and thus far this actually held, and it's also very close to this structural bottom right here, coming in from 5th of October 2023. So there is some structural support possibility of a double bottom around here as well. Now let's take a look at the USD JPY. And here we go. So as the dollar was strong, we have seen Friday close higher. It still remains a possibility we might actually fill this gap in, which is this box. Maybe we get to 160.60 level. That remains a possibility, but what we have seen is some sort of a pullback right into the 50%. So this currency pair is really interesting, because also very there is, I believe, some correlation with the 10-year as well. So I'm going to put it on a new pane. This is the yields for the 10-year, and here we go. We can see that if the yields are moving higher, then the Japanese yen also tend to move higher. So it has put in pretty nice bottoms around here. But if the yields begin to pull back, and this is what we have seen, then we can see the weakness come into this currency pair as well. So there's a fair amount of correlation. This kind of correlation actually also exists within the US dollar as well. So let me actually get rid of this, and I'm going to bring the US dollar and just show it to you what I mean. And let's take a look at in a new pane. This is the 10-year treasury yields, and you can see that there's pretty good correlation. Here we go, between the 10-year treasury yields. So the treasury yields started to rise here, and we began to see a nice, well, pretty strong rise in the US dollar as well. Here they kind of peaked, and we saw a top coming into the US dollar as well. So if the 10-year treasury yields begin to pull back, we can see weakness come into the US dollar and also in the USD JPY as well. So again, let's keep on watching for these correlations. Sometimes they're really strong, and sometimes they just stop working. Now let's take a look at the treasury yields. So we'll start by taking a look at the shorter end of the curve. We can see after the Fed basically announced they are not going to be cutting rates, it's a sideways movement. There is still, in my opinion, bias. We could still see a little bit lower rates around 4.07 right here. I think it's gonna be more of a trading range affair, to be honest, with these shorter end of the curve. But if we break below this 38.2% retracement, that is going to be an indication that we are looking at lower rates to come our way. But right now, as long as it remains above this 4.07%, I think we remain range bound right here. The upper boundary being 4.4546, which is a 61.8% retracement. Now let's take a look at the TNX, because the 10-year is interesting, because if we just look at the 10-year and what the 2-year are yielding, there is just not that much of a difference. There's about a 30 basis points different, but in terms of the duration, there's a big difference. There's one is 2 years, the other one is 10 years. So a lot of people actually like to take a look at the spread between a 10-year minus 2-year, and whether the spread is actually widening or is contracting. And it makes a lot of sense as well, because 10-year is in duration much further out. So one would want to have a more risk yield appetite for taking a longer duration of risk. Simple. Okay, so here what we are looking at is on a 10-year treasury yields on the daily chart. So y-axis is actually yields, and we have seen last Thursday and Friday a move higher after having a nice pullback right into this region. There's a possibility of a head and shoulder, so a left shoulder, head and right shoulder, and if we break below this 4.48%, I think we could actually come to see the rates yields being down to 4.38%, which is 61.8% retracement. So I think we remain in this kind of environment where a lot of this will depend with a lot of these correlations between the dollar, the 10-year treasury note yields, the USD JPY. And with the yields, there's a possibility that it might be a little bit early, that actually we are actually seeing a pull back into the yields. So we could actually see on the break of this, the yields moving to 4.388%. But right now, we are actually seeing the yields move higher. We could see actually these go as high as 4.63, which is the 20-day moving average. And this is where we might find resistance come in. So again, the bias remains for the yields to the upside, with the potential that we might actually be in this head and shoulder pattern, but this neck level needs to break for a breakdown to about 4.38%. So this is for the 10-year, and if we just take a look at this on the price, this is through the futures. This is 10-year treasury note futures chart. We can see that we have not broken the bearish symmetry yet. This was the biggest rally that we had seen, and market just moved much lower from 38.2% retracement. Really, it will be the case that if the market is able to get above the 110.15 level, that we could begin to see a serious move higher. What we are looking at is basically, if you just look at this bottom, which came in right at the 78.6% retracement, a little bit lower at the 1.6 minute expansion of this little corrective move that we had, we in fact have kind of a double bottom formation right here. And then of course this level is higher than this level, so this will be a higher high with respect to the bottom which came in on the 20th of October. So a really interesting juncture where we are right now. And if we were to take this on take a look at the long bond futures, is the 30-year duration, we see similar to 10-year, the bearish symmetry is still intact, and it found support from the 78.6% retracement of the lows back in October of 2023 to the highs which came in around 17th of September. So the interesting thing is that the bearish symmetry is still in place. I believe it's really around this 116 to 118 level, that if the market is able to break above that, then in my opinion, I think we could say we might have seen some sort of a pretty good bottom, and the rates could actually move lower, or the long bond future could rally a little bit higher. So we'll have to wait and see. This is where we have the 89 period moving average as well, right here. But thus far, this has been a nice move higher. But again, from a bearish symmetry perspective, that is still in play. Now let's take a quick look at the Bitcoin. So here we go. So Bitcoin right now is actually pricing in a risk-off kind of an environment. This last Friday's pullback began to happen. We could see it pull back right into this 93,300 level, which is going to be the 78.6% retracement, and we have some other expansion levels coming in as well. So this is what level that we are watching. And then if we take a look at the Solana, here we go. This is daily chart for Solana. You can also see that's being pulled back. What I think is that we are actually in this ABCD move higher, which is in blue, and we could see 318. But it all depends upon whether this 196.50 level is held on closing basis, because that's going to be the biggest pullback that we have seen right here. And if we were to do the same market symmetry concept, it comes very close to 196.50, which is the 78.6% retracement. So we'll just keep on watching this level. If this support is not held, then the structure is changing. Otherwise, I do think that we might be actually in this ABCD move higher, the one in the blue. Now let's take a look at the Ethereum. Okay, so this is Ethereum, and the chances are, if you look at this, we are actually in a channel formation, but we might be actually heading towards 27.25. Maybe as low as 25.50. We'll have to wait and see, because we have several of these ABCDs completing right around 27.20 level. That should be pretty good support. So let's see if the market gets there. Now let's take a look at a really quick look at the gold market. Very quick look. So the gold has been actually much stronger than I had anticipated. And here we go. I think because of the rollover, we have seen a nice jump right here. But at this point, when we were taking a look last week, my thoughts were that either we have completed the correction and we could actually break out of this dynamite triangle formation or to the upside, or we are still in the correction and we could move right here into this box. So this did not pan out, and what we have seen is basically the market move higher, and it's very close to the 1.272. Now if we were to take a look at this on the spot market, then it has made new all-time highs as well, but it's remain it's not that big of a move right here. Now I think the gold remains positive, and we could see the psychological level of 3,000 being reached. We'll have to wait and see. The bearish scenario that I was looking at right here, it did not pan out, so it has made new all-time high. So we'll just keep on watching the price action right now. Now let's take a look at the equity markets. So we'll start by taking a look at the German DAX. Here we go. So the German DAX has been really strong. It has actually completed these patterns, moved a little bit higher and closed in the negative territory by a small margin. Actually, it's telling me it closed 0.02% positive. So we'll just keep on watching this, because it just met our targets. Now watching the price action. Now if we were to take a look at the FTSE 100, it also met our target of this 86.22. Moved a little bit higher, so with the possibility of 88.13. We'll have to wait and see, but our bigger the target we were really looking for was 86.22. That has been met. It was also this ABCD pattern formation right here. Now let's take a look at the Nikkei. So this is the Japanese market, and here we had some timing come into this market on 13th of January. We saw actually the US markets put in a bottom and rally, and this market did not actually, but it put in a low, and which was tested on the 17th of Jan, and we have seen some sort of rally. But the market, you can see, is range bound and closed below the 78.6% retracement, so we need to be aware of that unlike the US markets, this market put in a high back in July of 2024. Whereas the US markets put in a high, as some of them, depending upon the index, in December of 2024. So we'll have to wait and keep on watching this one. And if we just begin to see move lower in this one, I think that could also impact the other global markets as well. So this is what we are looking at in Nikkei 225. Let's take a look at the S&P 500 cash index. This is the daily chart. And here you can see that in the cash index, we did not make new all-time highs, but we came pretty close last week. So here, where we are right now, I see two kind of possibilities on the daily chart. We might be in this blue ABCD, which could actually see 6,300 on the cash index, or just because the market last Friday closed below the 78.6% retracement, below the 6,092 level, we could see a ABCD move lower, testing the bottom of 27th Jan. Or maybe a little bit lower as well. So that remains a possibility. So either one of these two patterns is in play. The chances are we might actually be in this little bit of a corrective pattern, which could see 59.49 on the cash index. On the upside, we have 6,300 as our eyes set on the upside. Now here we go. This is the longer term weekly chart. You can see that the longer term trend line is intact right here. We are in this region that we have known for a long time. We completed several of these ABCDs right here. It's proving to be quite a difficult region for the price to break out of onto the upside in particular, but also the downside, because it just keeps on moving back into this trading range. So the high came in, or the first high was around 2nd of December, and then we have had a high come in on 21st of January of 2025. So remains range bound in this market, and we know the reason. It's because of the completion of these several patterns. And if we take a look at this on the futures chart, it's similar kind of picture. We have these ABCDs completed right here as well. Now let's take a look at the cash market for the NASDAQ 100. This is the weekly chart, so it's longer term, and the chances are we are in this extended ABCD, which could see the NASDAQ actually move even higher, a little bit higher. If that were to take place, I think it's also going to pull the S&P 500 with it to the upside, and we have the upper channel boundaries coming in around this level as well, which is 22,713, maybe even 23,000 might be on site. Things are likely to change, and we could see a test of this lower boundary of the channel if 20,500 is broken to the downside. Look at the 20-week moving average has been providing support right here when we had this pullback coming in, which put in a bottom on 13th of January 2025. So at the moment it's more of trading range behavior with the bias to the upside, and we could see the completion of this pattern, which could also pull some of the other indices such as S&P 500 with it. Now here we go, NASDAQ cash on the daily chart, and what we are looking at here right now is it broke above this channel. It's just in a trading range, again closed below the 78.6% retracement, which indicates that either if we get above the 78.6% retracement closing basis, new all-time highs are in sight. Otherwise we could see a pullback, which could take us into 21,070 and even as low as 20,830, which is going to be the 78.6% retracement right at the 89 period moving average as well. So really two scenarios which could play out for next week. So we'll have to get further clues from the price action, because last Friday, and not just only because of the 78.6% retracement where it found resistance from, it was a pretty good rally which took place, but then gave a lot of it back. But it's also a pretty bearish looking candle. So that just shows that it's a wide-ranging bar. There was power behind that move. So let's wait and see what sort of follow through we get. Now let's take a look at the Dow Jones. So Dow Jones Industrial actually made a new all-time high. So this is the futures chart. This is not the cash. And here we go. So it actually put in a new all-time high, went above the highs or the top, which had come in actually in late November or early part of December 2024. So this is a really interesting development. It also shows that actually there is some rotational element in the marketplace, but also on the other hand it's also a big trading range behavior what took place. Now since it's above the 78.6% retracement of this entire move, swing high to low, it remains a stronger index. So there is a chance we might have seen some sort of good pattern completion, because we have this ABCD completing not too far off, or the market might actually try to attempt and complete this pattern. We are not too far off with respect to the high that we saw last week in Dow Jones Industrial. So if there is going to be a pullback, which remains a possibility the way the market closed last Friday, then we have the 38.2% retracement coming around 44,000 level, which is really the bottom of this 27 of January move. Here we go, right here. So 44,000, that remains a key level for us. Now on the weekly chart, on the Dow Jones, here we go. So this is the box we are drawn way in advance, and market went right into it. We have this big black ABCD completing around the 47,000 mark. So there's a possibility that what we are looking at is actually the Dow Jones could actually rally and make new all-time highs and try to complete this 47,000 level on the weekly chart. That remains a possibility. And although I'm not a Elliott wave person, but if we were to just take a look at this little move right here, there is a possibility that what we might be looking at is wave 1, a pullback wave 2, this is wave 3, a pullback of wave 4, and we might be in wave 5, which could see the this market move a little bit higher. But one of the things about Dow Jones, especially on the cash index, sometimes the fifth waves get tourniqueted. So that has happened in 2010 once. It could happen in Dow Jones index. I've seen more of it happen. Again, I do not. I'm aware of Elliott wave principles, but I more look at the pattern recognition. But that sort of behavior could happen if one was looking at from the counts from an Elliott wave perspective. Okay, so this is what we're looking at in the Dow Jones Industrial. On the weekly chart, we still have a possibility to move higher a little bit. And now let's take a look at the Russell 2000 futures. Here we go. So this is one of the index which is for the small caps. We have seen trading range behavior essentially on the weekly chart. It completed this ABCD, this red one, and just gone nowhere. It just retraced. The retracement looks more like a it came very close to the 38.2% retracement, which is a pretty good support level, to be very honest. Here we go. Now let's take a look at this on the daily chart. Here we go. And on the daily chart, we can see that it's actually against some sort of a resistance. So let's take a look at what sort of resistance it is. Looks to be about 50%. There you go, exactly. So getting above this will be bullish. Otherwise, we could see, pullback, but it's just stuck in a trading range right now. Last but not least, let's take a look at the New York Stock Exchange Composite Index. So the good thing was it broke above this 38.2% retracement. We saw a really nice move higher. It resembles pretty much to the price action, very close to the Dow Jones Industrial, but I think where we are right now is closing below the actually we are above the 78.6% retracement. So a pretty strong price action in my opinion. Last Friday, I saw some sort of a pullback. Maybe we remain range bound over the course of few trading days, maybe a bias towards a little bit lower. But we could see a good price action in this index as well. So I think next week is going to be really key for the US stock indices in terms of the price action, because what kind of possibilities that we are looking at, especially in the S&P 500 and also in NASDAQ, because they closed below the 78.6% retracement levels. So we could see a continuation of a pullback if the pullback indeed started last Friday, and getting above the 78.6% retracement levels is actually really positive for the bulls. And in my opinion, on the cash level of S&P 500, we could actually see a move higher, which could actually take us to around 6,300, and that remains as a possibility. So this is what we are looking at in the various markets that we follow on the channel. Apologies, the video has been a little bit longer, but I covered a lot of these markets, including the crypto, so I hope you will appreciate that. So thank you very much for watching the video, and if you found this educational and of value, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. And if you just learned something out of or enjoyed watching the video, then please do also hit that like button. Thank you very much. Good luck, good trading, and speak to you guys soon.